Huh?
I want to stay in there.
Honey, you're back at streaming.
Yes, after in 30 seconds. I want to like today.
Alright. Alright, boys. Hope everyone is well. I think my wife kissed me with some lipstick. Get that off. Yeah, so trades are coming along nicely here. What we have is an extension of that euro breaking 110. We talked about this a lot yesterday, how the euro was in a very strong position here, and so the market was catching on to this ECB normalization trade. Yields are definitely starting to show that, and when you have a sort of a market looking for a story, this one is pretty compelling. Positioning is very light as well, so you know you can build up long positions. It's in a well situated situation here that you could start a trend. Now, how long can this trend last for? Well, you'd expect Draghi wouldn't like it, and Draghi's going to speak on Thursday. I don't think that Thursday is the right timing. I think the ECB meeting in June potentially is where we get a little bit of cold water on this rally, and by then we could be around 112. So the next 2 to 3 weeks, we're looking for the market to continue higher, up to around about 112, 113, and that would be the sort of short-term completion of the trade. ECB, I doubt, is going to be in any rush. I think it'll come across as dovish compared to what the market's pricing in by that time, because it'll be a bit of a frenzy on that trade. If it gets up to there, you know, it'll be really everyone talking about it, all analysts, you know, coming out with it, giving reasons to keep on buying. Very little reason to be short, and the shorts must be worried now. Yeah, so we did have a little bit of weak data out from the German ZOE. I think that's going to be short-term profit taking, nothing crazy. I was surprised if we would go back below 110 now. Should be some pretty good support down here. In the next 20 pips should be pretty good support. So if you're not in the market, you can probably buy on this dip and put your stop below 110 and try to get a hold of this potential rally here, because it could easily start to become a thing. Now, topside, apart from 112 and 113-ish, there is a fair bit of resistance between 113 and 115. And so this is going to take a while. I suspect we'll actually develop a range trading sort of up here, because the US is raising rates in the same sort of time here, so it's hard for the euro to be ultra bullish. That being said, it's you know, this trade, I'm you know, this is sort of my core trade, and I've been talking to you guys about it for a while, and so I'm really going to be trying to work it as much as possible until something changes. And the only thing that can change really is ECB delaying this rally, and it can't really stop this rally. It can only delay it, but it can delay it a good 2 or 3 months. So you know that could put it into range trade. When it goes into range trading, say Draghi successfully talks down to say the 108 level, I'll be buying again. Yeah, so this is going to be a constant theme you're going to hear from me probably for the rest of the year, buying the euro on dips, depending on how far we get higher. It's going to be the trade that I really like. And so it's developing nicely, and I get excited when things happen as I sort of I want them to happen, because you know that means you're sort of in tune with the market sort of and ahead of time, right? So you can start to get more aggressive in how you're feeling. Now other pairs aren't exactly going with the euro, so it is a euro phenomena, right? So that is something to keep an eye on. So euro Aussies rallying sharply, euro pounds rallying sharply. And euro pound's a big sort of litmus test for euro strength or weakness, and it's having a nice little run up. It hasn't got solid resistance for another 100 points or so, so you can really start to rally as well. And the pound had strong CPI, but not enough to change sentiment. Actually, the market's probably caught a little bit long, and you're seeing that played out mainly through the euro pound leg. This week there isn't too much data going forward either, so it's going to be a bit of one of these games where they can play this sort of move. Look, it's not the way I want to play it. Euro pound is not the way I want to play euro strength. Euro USD is the way I want to play it. In the backdrop, there is some developing political risk over in America that's getting worse by the day. Trump gets sort of out of control a little bit, and could get worse if he puts his foot in his mouth a few more times. I suspect that we'll move closer to the Republicans revolting, and that's, you know, only 2 steps away from in some sort of, you know, bipartisan impeachment. If he really goes to war with the status quo, which is sort of his MO, right? I mean, he definitely doesn't back down from things. So You know, that could develop pretty quickly. Probably not, though. You know, we've seen so many false storms with Trump. It's hard to know what a scandal is with Trump, right? I mean, it's like, well, shit. He can pretty much do anything and get away with it. How far can he go? And that's sort of what we're finding out as a group and as a market. And stocks have been remarkably resilient, incredibly quiet, and that can't continue forever. VIX is posting now, you know, it's 11 days lower than 11 or something. It's like a record run of low volatility in a market where there's so much uncertainty going forward. I doubt this can hold. But so far, you got to play what's on the board, right? On the board is strong risk sentiment. That makes it hard to sell the dollar yen, hard to sell yen crosses, and that's where you're seeing support come through. So the strongest pair in the market right now is euro yen, breaking above 125, pretty solidly, and it's really not giving anything to the bears, and so the pullbacks have been really shallow, and that's you got to keep that in mind. In terms of political risk and how to play that, some traders have been playing via the gold. Now gold is grinding higher, yeah, and it's relatively cheap to where we were back in then, only 2 weeks ago. But it's not the way I want to be playing it. I would actually, if I was going to punt on sort of uncertainty, I'd play dollar yen short. I think it'd be US dollar weakness that comes through. And soon, right? You can sell here with a stop above 114. It's not bad risk reward. Just you need the catalyst, because every time the dollar yen's been going down, it's been coming back up. You need something to break the back, and we haven't got that lately. Just relentless sort of rally. So if you start to see stocks though do roll over, both DAX and the Dow, then dollar yen's probably better. Depending on the story though, we can look to buy gold. Just not now. Yeah, it's not enough for me. I don't think we've got that there. But this trade, and we talked about this, the euro can trade even with a strong US dollar. The euro can go higher. Imagine what it would do with a weak US dollar. It would be tremendously strong. So it's doing really well in the face of adversity, in the face of the Fed raising rates, and it's to me is potentially one of the easiest trades this year if you believe it. But believing something is sort of hard. It's Euro's been pretty quiet for a couple of years, right? It's hard to get too excited. And so I'm not going to start talking to you about 120 stuff, but that's eventually, I think, where we're going to get to in 6 months or so time. In terms of what else is going on, yeah, so you're seeing the Aussie rollover. Don't have any trades open with that. Aussie rollover, so's the Kiwi. We're talking in the trade room earlier about this is really weak price action, actually. So we're talking about buying it all the way back up, and then I got out of everything, and I didn't buy this dip, and luckily, because the low was starting to get lower, the high was starting to get lower, and then we got a third low, a third high that was lower. That was just sort of like, wow, 69 is just too much right now for this Kiwi. And we'll talk about getting out of this trade as it started to fall. And it's yeah, so if you're still in the Kiwi, be very concerned. Pound Kiwi or Euro, Kiwi shorts. That's not the trade that you want to be in, I suspect. Given that price action the last couple of days, this is supposed to be a rally up to 70 cents, and it's failing pretty hard. So be very cautious. In terms of the CPI data, look from the pound, it did come at 2.7, a little bit higher. I was actually expecting maybe it not jump to 2.6. The fact that it did though, and the market's still selling, shows you there's a little bit of still concern here, and positioning is a bit wrong. And this sort of thing is usually not faked out, right? It's not usually a fake sort of move to whip out and go back up to 130. Even though it's strong data, I suspect that we can go lower here. I mean, I'm not a seller of it because of pound yen. And pound yen, if I was going to buy anything, would be on the back of pound yen. Lower, but yeah, no. I mean, it looks too weak, right? Looks too weak. And there isn't a reason to get bullish on it again if the price action is weak. The pound rally was all price action. It was nothing else, right? The short squeeze and then sideways grinding, you know, it supported the idea that you could keep buying on dips. Now you've got this sell-off, it's hard to keep supporting that view at these levels. And so it's yeah, better to sit on the sidelines if you're unsure. And I'm definitely unsure about the next 100 pips here. It wouldn't surprise me 130, but definitely wouldn't surprise me if we break lower. I think that's more likely than not. Alright, so how does that leave us? It leaves us looking to buy dips on the euro, keeping an eye on stocks and dollar yen to see if they eventually roll over and give through to support. Hard to see dollar yen having another test lower now without stocks giving some reason. There isn't data out from the US to get the market excited tonight. I mean, there's housing data, but that's nothing. And second tier industrial production data, but that's not enough. The big piece of data tonight is going to be the dairy auction, actually. So the dairy auction has been improving. That's the Kiwi data, and that's that could start to sort of play a game here. And if we somehow get back above 69 now, that would actually be you know, go from a very bearish sort of setup price action to a very bullish price action. We can talk about buying again tomorrow if that can happen, if it's strong data, because that'll be just 6 pieces of strong data in a row, and very hard for the market to ignore that, no matter how many people are trying to sell in rallies, which is what you're seeing sort of with the Kiwi. Oh, that's a nice sell, Jenny. You got your limit order just straight up bang. Is that a hedge or is it straight selling? Yeah, I'm a bit suspect on the dollar yen. I just don't have the sort of reasoning to sell it right now. Not with into that sort of rally, right? Alright, let's have a look at some of the research out there. ANZ put a nice little report out on the ECB normalization trade. They're not as bullish as I am, but they definitely have the right sort of idea, I believe. Even if the ECB is slow to change, which is what they're talking about here, I still think it's a relentless change. And markets sort of like to have that underlying support on dips to create those trends. And that's all you need, yeah? Like this feeling that QE is about to end and rates are going to go down is enough to support the euro on any big dip. Alright, risk of further upward squeeze in euro cannot be ruled out, but policymakers, said Draghi and his friends, will not want the sustained FX-led tightening in monetary conditions. I mean, what's that other little piece of news that came out today? Yeah, I saw that earlier. That was like, struck me as ridiculous. So we're dealing with a sort of such an uneven Europe. So Germany's overtaken China as the world's richest exporter. 297 billion trade balance. Jesus. And a lot of it's really, really highly value added. Car cheaters, they just make nice cars, don't they? Alright, so they think deflationary risks have gone. The average exchange rate since a single currency came in is 121. That's not really one. It's diminished political risks and diminished downside growth risks. So everything's coming up Millhouse when it comes to the ECB. ECB guidance still hasn't really updated yet, and everyone's looking to this June meeting to get this sort of update and sort of wording change. Their conclusion here is that they're not looking for June to be this sort of watershed moment. I mean, June's going to get hyped up, and the further the euro rallies, the more hyped up it's going to get. But I suspect we are going to get sooner rather than later talk about the ECB tapering. So yeah, nothing to stop the euro rally, and a very shallow dip here. Very shallow dip. And hasn't even really started trending yet, so don't get too worried if you've missed it. There was a story going around in Asia about Trump revealing classified information when he met the Russian foreign minister and ambassador. I don't know. I mean, he seems to be able to get away with this sort of thing. So, and some of his advisors have come out already said it's false. But it's US could be a different session if it if you get it evolving into a bigger scandal. Those news cycles over there are a little hard to predict what they're going to latch onto. Could be a non-story or could be a bigger story. Depends really if they can get sort of what they're talking about out, because supposedly, but in the backdrop here, he gave leaked information from an ally who wouldn't want Russia to know, right? So if it finds out, then they could lose that ally, whoever that ally is, and that's really another thing we don't know. But I suspect if there's still going to be leaking going on in the White House at the moment, and those leaks that got this even story out there, then you could see it become a much bigger story. And it's scandal to scandal, right? In the last, since he got into office, it's not going away. I mean, this is like 3 or 4 days after Comey got fired, right? Oh, Jesus, I mean, the guy doesn't even let one scandal get out of control. He goes into another scandal. Remember that Carney's not too worried about the inflation. He's more worried about employment and wage growth. So, I don't know. I mean, it's hard to be selling risk, right? It's hard to be selling yen crosses when the market's not responding to what you would think would be ultra negative headlines. And so we just have to play sort of, pairs which are doing really well and showing strength by themselves, and that's the euro. Now you can go to look to buy Euro Aussie and Euro Kiwi and Euro CAD in particular. Euro CAD's probably a better one since CAD had a bit of strength recently. Still hasn't got back to highs. But you are dabbling a little bit in oil there, and it's not my main way of playing it. Euro Aussie is probably a little bit safer and showing a little bit more strength and potential upside. 150 is the next target here. Should be hard to stop that happening, but we're pretty late to that party, and it's very simple just to be straight euro against the US dollar as we are currently. Alright guys, so yeah, no new trade recommendation today apart from continue to hold your euro and move your stop entry. That's fine, that gives you a little bit of safety. And from that point we can look to build on dips, or what we'd rather see here is extension to say 111 and then a pullback and buy the dip towards 110.50 or whatever we get, 50 to 70 pip pullbacks in this rally. You don't really want to see it back below 110. If it comes back below 110, it's going to be a little bit harder and a bit more riskier to buy the dip. It should remain fairly solid now going forward. Alright. Any other pairs that you want me to look at today? Otherwise, we'll keep it pretty simple here because there isn't much going on. Just keep an eye on the dairy prices if you want to trade the kiwi. That's growing in importance, right? It's almost as important as those oil inventories are for the CAD each week. So it's definitely for you if you watch the kiwi, then you're gonna have to keep an eye on it. Alright guys, everyone trade safe. I'll be back tomorrow at the same time.